Should you consider life insurance in retirement? That's what we're going to talk about today. So for some people, they should be considering life insurance in some form or fashion. One way they may consider using life insurance is, hey, if I pass away, I just want to make sure my spouse is taken care of. And for that goal, maybe a term life insurance, which is lower cost, could help fund that goal. The other people may say, I'm fine if my spouse passes away. I don't need that term life insurance. I don't need to pay for something that I may never use. But they may say, I have one of these other goals that I want to achieve, and maybe life insurance could make more sense for them. So we're going to go through 5 specific reasons why life insurance could make sense for you. Remember, this isn't right for everyone. Life insurance is not a everyone should have it type of plan. It's really more specific with our clients. Not all of them have it. Some of them do. It really comes down to what your goals are and what you're trying to achieve with this type of tool that you have in your toolbox. The first reason why you should consider life insurance in retirement is for the tax-free death benefit. And when we talk about the life insurance we're talking about here, we're typically talking about more of a permanent life insurance policy where it's going to last for the rest of your life. It's not going to go away like the term insurance I mentioned earlier. If you have this type of policy, it's going to give you more flexibility moving forward. It is typically a higher cost. You have to be aware of that. But typically you can use it more in a way to accumulate or have some of these features that we're talking about. But one of those ways is through tax-free death benefit. And so when you pass away and you put in what we'll call one coin, which is $100,000. Let's say that you put in $100,000 in this life insurance policy. Well, maybe when you pass away, it will spit out 3 coins to whoever that beneficiary is. If that's your spouse, if that's your kids, whoever it may be, you could leave a tax-free death benefit to them. And there's some types of policy that you can leave behind a tax-free death benefit that is guaranteed. So you know it's going to go to them. And so you have that surefire amount that you know is going to go to the kids, that you know is going to go to your spouse. And so that can be attractive for some people. We especially see that strategy used for people who maybe have a pension and maybe they don't want to pay to take the survivor option. Maybe they'll replace it with a permanent life insurance policy. And so if they pass away, if them and their spouse pass away, that money could still go to their kids or somewhere else. Rather, if they took the spousal option on their pension, it's not going to go to the kids. If they both pass, there's done. The pension isn't going to go anymore. So that would be a consideration there as well. So back to the tax-free death benefit though, for those people we see who have done a great job of saving in those tax-deferred dollars, when you take that money out, you're going to have to pay taxes. And so we like to talk about what we call is tax diversification. And that's where you don't have all your eggs in one basket from a tax standpoint. And so a lot of people have a lot of money in those IRAs and there's 401ks. This could be an avenue where you can leave behind money tax-free in a different way to give you that tax diversification there. So let's talk about this tax-free death benefit just a little bit more here. I just want to share some more particular strategies where we've actually seen this actually come in pretty handy. And one has to do with what we call the widow's penalty. And so when one spouse passes away, you go from married filing jointly tax brackets to now single tax brackets. And if you know anything about tax planning, that's a big difference. And this could cause you to pay double the amount of taxes if you're single. So something that we've seen done before, if we've had a client where we had a life insurance policy in place for them, and so when the one spouse passed away, we now had this lump sum death benefit here that we could utilize to pay tax for Roth conversions and other types of tax planning strategies that we did where we had to pay the taxes now to get more benefits moving forward. So like with a Roth conversion, you pay your tax now, but you move it to a Roth and you can get the tax-free growth moving forward. And that's one of the considerations that we looked like for them because they had the money to pay taxes. If we didn't have that life insurance, we wouldn't be able to do that strategy because we wouldn't have had the area anywhere to pay those taxes because they were under 59.5, and we would have had to pay penalties if we withheld that money when we did that Roth conversion from that IRA. Another one that's pretty common is paying off your house, right? So a lot of people like having life insurance in place to just pay off the house. And again, you could probably just use a term policy and save some money if that's your goal. But maybe you have other goals and you like these other features. Well, now you can just give that other spouse the peace of mind, or maybe it's your kids the peace of mind, and know that they don't have to worry about selling that house right away to cover that mortgage and do a fire sale where they're not getting the best value, or they don't have to worry about any mortgage payment moving forward. Could be another advantage of having life insurance in retirement. The other consideration here is understand how Social Security works here. So if one spouse passes away, one of the Social Securities is going away. So let's say that both you and your spouse make $3,000 a month from Social Security. Well, you currently have $6,000 a month with both of you. If one of you passes, $3,000 gets cut out, you're only left with $3,000. So you lost $36,000 a year that you could have been living on. So maybe a life insurance comes in and fills that gap if you feel like things are going to be tight if you do lose one of those sort of Social Security benefits. We have some clients who they've saved so much money that that's not a concern. We have some other people, hey, it may be a little more tight. We just want to make sure we have that peace of mind to make sure that we've got the rest of the plan taken care of. The second reason why we can see this type of permanent life insurance policy makes sense in retirement is for healthcare costs. So some life insurance policies have what's called an accelerated benefits rider or a long-term care rider, where you can actually use some of that death benefit we just talked about, and you can start using that for healthcare before you pass away. And this can be a great way to get those benefits tax-free and to make sure that that money's available for you if something like that happens and you don't have to tap in to your investments or any other vehicles where you're drawing it down. And we know that this is going to give us some more leverage there. You know, if we put in the one coin, we could get 3 coins of leverage like we talked about in the example earlier. And obviously healthcare is a big concern moving forward for many retirees. So this is another way to add another sense of protection to your plan for whatever may happen. You know, if you ask me what are the biggest expenses in retirement, it's going to be the income you need to live on. It's going to be taxes. It's going to be healthcare costs. And healthcare costs are probably going to continue to rise because of simply supply and demand. There's 10,000 baby boomers turning 65 every day. That's happened for the last 10 years. We're expecting to happen for 10 more. And so when you get to that time of needing healthcare costs, do you think everyone else is going to need them? And what do you think the cost is going to be of that? And so we need to start planning for this, considering that most of us are going to need healthcare in some way throughout retirement. The third reason why a life insurance policy could make sense for you in retirement is for tax-free income. Now, this isn't one that I'm super fired up about, but it is an option. This is one that we don't typically recommend our clients to do a life insurance policy for this feature, because if you do this at a later age, you may not be able to get the growth moving forward to be able to take those tax-free loans from those policies. And it can just be a lot more complex and complicated for some people. You know, if you're younger, this could make more sense, but I'd even say to watch out for it even if you're younger as well, because there's just a lot of complexities there, and there's a lot of other things that we want to see done before it's possible. But if this is something that you just want more information on, basically the way it works is you can accumulate cash value within this life insurance policy depending on what kind you do, and then you can take a loan from that life insurance policy, which doesn't count as taxes. It's not considered income. It's not a withdrawal. It's just simply a loan, and then you could strategically position your life insurance so that you always have enough cash value to carry that loan moving forward, so it doesn't ever lapse, and then you're going to be able to take out that money without concern of that policy, you know, going away. And the thing to watch out for that tax-free income is just watch out for life insurance salespeople who just try to make that sound way better than it is. It's a great concept. It sounds really good, but it may not necessarily be the best vehicle out there for that particular goal, but it could work. So just something to keep in mind. So the fourth reason why life insurance can make sense for you is what we call diversification from the asset level. So we talked about tax diversification. Remember, not all your eggs in one tax status? Well, now we're going to talk about asset diversification, not having all your eggs in one basket from the investments that you choose. So typically, most people we see, they have their stocks, they have their bonds, some may have annuities, some may have treasuries, some may have CDs, some may have money market accounts. They've got a broad range of investment options. Well, we see the life insurance as almost another sense of asset class, right? It's a different type of vehicle that is under different rules. From a tax standpoint, life insurance, the tax-free benefits we just talked about, are different than a Roth. They could change the rules on the Roth. They could change the rules on the life insurance. Anything can happen, but they're under two sets of rules. So if one changed, maybe the other didn't. So it just gives us that flexibility to know we don't know what's going to happen with stocks. We don't know what's going to happen with bonds. Just gives us another sense of flexibility there. And that's one reason why I personally like the life insurance story and the idea is it's just something different. It's something that adds a different feature, a different benefit, and just can be more of that Swiss Army knife that we're looking for to just complete our plan, make sure we're in the right spot. Because you have to look at it. Do we want to build the biggest barns, or do we want to make sure we've got a really tight financial plan to make sure that we're covered if any risks were to occur? The fifth reason why life insurance may make sense in retirement is what we call the estate tax. So with estate tax, it may not be a concern right now considering the levels are so high, about $13 million right now, but there's talks of this coming down and getting cut in half come 2026, and it's been as low as $1 million or less in the history. And so if that's you and you're concerned about this estate tax potentially eating at some of this legacy you want to leave, well, maybe we can look at strategies like an ILIT, an irrevocable life insurance trust, where you can protect it against those estate taxes and leave more to your heirs, to your beneficiaries, tax-free and without an additional estate tax as well. So those are all considerations you want to look at. Just make sure you look at your specific situation to see if life insurance is going to make sense or not. But hopefully this was very educational and is going to help you get a clear idea of how to look for this and how to explore further.